Hey everyone, in today's video, I'm going to go over what private equity firms look for in a company. First, I'm going to explain the purpose or goal of a private equity firm, and then I'm going to talk through the qualities that private equity firms look for in a company, first starting off with the quantitative factors and then digging into the qualitative factors. Let's jump into it. The goal or purpose of a private equity firm is to buy a company using a large amount of debt and then use the cash generated by the company to pay down that debt, which in return will increase the amount of equity at exit for the private equity firm. So looking at the example below, let's assume that a private equity firm buys a company for $100 using $30 of equity and $70 of debt, and during the hold period, the company generates $40 of cash, which is used to pay down a portion of the debt. So when the private equity firm goes to sell the company, assuming that they sell for the same price they bought, the $30 original investment will appreciate to $70. And as you can see, there's a direct correlation between how much cash the company generates and the returns received by the private equity firm. So keep this in mind as we look at each of the qualities that a private equity firm will look for in a company, because in one way or another, each of these qualities will be used to assess how much cash a company can generate. So to start off, the three main quantitative qualities that private equity firms look for in companies include recurring revenue, healthy margins, and low capex and low net working capital requirements. Starting off with recurring revenue, private equity firms look for companies with stable and recurring revenue. This can be in the form of contractually guaranteed revenue or highly predictable revenue. The reason that private equity firms look for this quality is because the higher the portion of recurring revenue, the more confidence the private equity firm has in the company's ability to not only maintain but grow revenue year over year. Second, looking at healthy margins, private equity firms look for companies with high margins, both gross and EBITDA. They will also identify ways to increase margins prior to buying the company. The reason that private equity firms look for this quality is because the higher the margin, the larger the portion of revenue that gets converted into cash. Finally, looking at low capex and low net working capital, private equity firms look for companies that require little capex and have little net working capital funding requirements. The reason for this is because the less cash that can be spent on funding capex or net working capital means that there's more cash available to pay down debt, which in return will increase the returns for the private equity firm. So to sum everything up, the three main quantitative qualities that private equity firms look for in a company include recurring revenue, healthy margins, and low capex and low net working capital requirements. Now let's take a look at the qualitative factors. Private equity firms look for companies that operate in a favorable industry, have a leading market position, and a strong management team. First, looking at favorable industry, private equity firms look for companies that operate in growing and recession-resistant industries. The reason for this is that it is much easier to make outsized returns when buying a good company in a great industry than it is buying a great company in a declining industry. Next, leading market position. Private equity firms look for companies that are leaders in their respective industry. This could include having a differentiated product offering or being the preferred brand by consumers. The reason that private equity firms look for this quality is because it not only makes selling to existing customers easier, but it also helps when the company looks to expand their operations, whether this is into a new geography or expanding across different product offerings. Finally, strong management team. Private equity professionals are known for identifying attractive investments, but rarely have tangible operating experience. And because of this, they will rely heavily on the management team for their operational expertise. So to sum everything up, the three main qualitative factors that private equity firms look for in a company include operating in a favorable industry, having a leading market position, and having a strong management team. Now, hopefully after watching this video, you understand what the goal of a private equity firm is, the quantitative factors that a private equity firm looks for in a company, and also the qualitative factors that they look for in a company. Now, if you found this video helpful, please like and subscribe below, and I look forward to talking to you guys again soon.